So here is another tutorial of how you can use candle manipulation model to stack entries or even to get multiple entries in a specific direction. So let us use this minute market structure here. I'll just remove all the drawings and show you. So we have an assumed bullish market structure. This is after price has closed above this level, right, and given us this swing low, which serves as a higher low, I mean, for this previous bullish market structure. At this point now you're looking for buys. Now when you start looking for buys, you are looking for the CMA model that I've talked about previously, and it can be from maybe even an area of value, or not a must it become from an area of value. You can take at any place that you wish. So here we have our market structure, a retracement, and then at this point here you can see you have a candle manipulation model present here and also this one, and you can use both of them for entries. So here you get this and you avoid the wick. You avoid the wicks being wicked out as I've shown before, or if you get stopped out, then your entry is even this one, stop loss below the engulfing or that manipulation, and you get a 4R or even a 5R. So let us take a 4R here. As price is moving up, you are looking for other candle manipulation models as well, and you can see here you have a manipulation model present here. So a fair value gap, this one was coming from an order block right here, so you can see this order block right there. And then here a fair value gap, you have this candle manipulating the low of the previous candle, tapping into a fair value gap and closing as a bullish engulfing. At the close of that candle, you want to get in like that, stop loss below the engulfing, and you are targeting also a 5R risk to reward, a 4R risk to reward ratio. So the moment you target a 4R risk to reward ratio like this is where that now the idea of stacking trades come from. So if your first position TP is here, this level, you now move it up here to this level so that you have a higher risk to reward ratio, and then your stop loss here, which was initially here, you can move it to this swing low, or you can move it to below this fair value gap right here. And so that becomes another setup that you can stack again, or you can take as another trade. And then as this price is moving, you can see we have another manipulation model present here. So a manipulation, close bullish engulfing, at the close of that candle, get in and target another 4R. So like that, target another 4R. So you're taking all the entries you can take in the direction of your trade. So you can even take this up to, let us see if we get there. No, it doesn't, but you can see that price moves significantly in that direction up to 4R somewhere there. However, there's the aspect of tightening your stop loss to make sure it is a smaller stop loss, because some of these stop losses are huge. Like this is a 33 pip stop loss, and this is 18 pip stop loss. This is a 20 pip stop loss. So anytime you have a stop loss range exceeding 30 pips, you want to reduce that stop loss range, and this is how you're going to do it. So the moment the candle closes as a bullish engulfing like this, okay, you can also see there's another manipulation here. So the moment a candle closes bullish engulfing and it gives you a very huge stop loss range, map out the low and the high of that candle or that pattern, and you want to get an entry at the midpoint. So the moment price retraces the midpoint like this, that is when you get in, and also target that 4R, and actually this can give you even a higher risk to reward ratio like that. So as this trade is running, you can see there's another manipulation here with what is the stop loss range here. The stop loss range is 28, almost 29 pips. Reduce it, so map out the range low and range high of that stop loss range like that, and get your entry at the middle point of this range like this, and stop loss below the engulfing or that manipulation, and target another 4R like that. So that becomes another one. And also another setup is right here, which is a manipulation, close bullish engulfing. I want to think this one is a smaller stop loss range. giving you only 12 pip stop loss, and you get in at the closure or the opening of the next candle stop loss below the engulfing or that manipulation, and target another 4R like that. So as you do that, because you're stacking trades, you're moving your initial, you can take partials here and move your stop loss to that level, take partials here and move your take profit to this level, take profit to this level, and that remains as that. So you can see all these 4 setups end up eating TP. As you stack your positions, you're also moving your TP. For example, the first position here, TP is here. We had initially moved it to this swing low here. The moment you have a new entry position, which is right here, you want to move your TP again to any significant low that has been formed, and that can be here. And then another position, still this becomes a good stop loss. Also this one, still this becomes a good stop loss. You can also have another stop loss here, so that in case price retraces, all these positions that are this one, and also this one will close in some profits. Yeah, so that is how you can manage that trade as keep stacking positions. And this is based on market structure. So if you are using the market structure to get your bias or even to frame your entries, you can see we have a break of structure there, a new break of structure, a new break of structure around here, and then another break of structure, a break of structure here, and then we have a break of structure, a minute one right here. So because you are in a bullish move, why is it not clicking? Because you are in a bullish move, we want price to give us a break of structure here, right here, but you can see price fails to do that. Instead, it gives us a market structure shift below this previous swing low, like this, market structure shift like that, and now from here you start looking for sales. So if you're looking for sales, then you're looking for bearish CMM, and that becomes, you can see even here we have another one, the first one being here, and this is a manipulation of this high, close bearish engulfing. You get in and target whatever you want to target, and now you start stacking positions to the lower side, 4R like that. And you can see very many candle manipulation models present here. So another one right here, manipulate close bearish engulfing, get in, short, get in, stop loss below, above that manipulation, and target a 4R somewhere there, which is same to this. And then here is another one again, manipulation. So you are stacking these positions, manipulation above that manipulation as a stop loss, 4R. Because our new 4R is here, you extend your stop, you take profit here and also take profit here. Here's another model again, right here, close bearish engulfing, entry at the next candle, stop loss there, get a 4R like that, and now extend your previous TPs to that level as well. So that is how you are stacking positions and managing your trades. Here is another position again, though it is a small one, stop loss above that level, and you are targeting the same levels as the previous ones. Now the same way you are managing your stop losses before is the same way again. The first position here, stop loss was here, move it here. The moment you get into this trade and you get a break of structure to the downside like this, so you have a break of structure there, that becomes a good swing point to where you can place your stop loss, and also here and also here. So the moment you hit this break of structure here, minute one, but it is there, then your stop loss is below, above this protected high, or you can also move it here. So that is how you are managing these positions.